Hey everybody, thanks for tuning into the channel today. This video is going to be all about one of our favorite loan programs to offer in Puerto Rico. I went back and looked at the numbers. It's literally 1 in 5 of all the loans that I personally originate, at least in the last year here on the island. And there's just a load of benefits that people can take advantage of with this program. So let's jump in. So the number one most important thing to know about the FHA loan program is that it can only be for a primary home for the borrower, right? It has to be your main residence, the main place that you live, right? And a lot of people want to call and tell me, oh yeah, it'll be my primary home. I plan to be there, more than half the year. That's great. However, it has nothing to do with how long you plan to be on the island. It has everything to do with if your source of income that's on the application, if that source of income would follow you to the island and that your income would remain exactly the same with you living on the island 365 days a year. That's how the underwriters are going to look at it. Like I said, it has nothing to do with how long, how many days a year, how much you like the island. That does not matter during underwriting. They're going to say, okay, what's your source of employment? What's your source of income? And is that income going to be able to follow you here to the island? So types of income that we can use, for example, if you already have a job in Puerto Rico, should be good to go, right? If you have a job that lets you work remotely 100% of the time, and you can get that in writing from your employer, not in writing from you, it needs to be in writing from an HR person, supervisor, or whatever on company letterhead, we should be good to go. If you can show that you can work remotely 100% of the time, that we can use. If you are self-employed, and it makes sense for you to be living and working in Puerto Rico, you can either do your job remotely, or you have a team of people that does your job, that manages your business someplace else, and that makes sense, and you can show documentation for that, we should be good to go. But if you, for example, are working at a job in the continental US, and that job will not put it in writing that you can work remotely, or that they're not going to transfer you to the island, or something along those lines, like whatever you do, don't quit your job and then move to Puerto Rico and start trying to qualify for a loan. That's definitely not going to get you very far, right? You have to have a source of income because they want to know how are you going to repay this loan, right? So that is the most critical thing to know about the FHA program, is it's only for a primary residence, and that whether or not we can set it up as your primary home comes down to the documentation you can provide about your income. The next things to know about the FHA loan program is that you can essentially, so long as you can provide documentation about the income, you can get qualified for this program with a FICO score down to 580. 580, that's super low compared to conventional, which is like 660, hopefully, right? Like it's a little bit of a little flexible, but like 580 is super low. That's the only loan program that lets us go down that far. You can put 3.5% down as the minimum down payment, that's really, really low, right? The only program that beats that consistently is the USDA loan program and VA, if you can qualify for that, which are both zero down potentially, but FHA is only 3.5%. And on a multifamily property, it lets you qualify for multifamily purchase, right? So that it can be like not just a single family home, but like a 2-unit home, 3 or 4, up to 4 is the max, and still go with only 3.5% down. Like, that's amazing. Like conventional loan program, if it's a 2-unit or 3 or 4, you're going to be looking at putting 25% down. But with FHA, it's only 3.5% down, and they're considering dropping that to 0 as well. So fingers crossed that we get that done in the new year. But at the time of this recording, at the end of 2023, only 3.5% down, FICO of 580, even on a multifamily. That's pretty incredible, right? Those benefits are huge. Another great benefit is that they can stretch people's qualifying income farther, right? So most loan programs, like conventional loan programs, even for your primary home, we have to go with what's called the debt to income ratio. Real quick, that's just like literally if you take all of the income that you make, like your gross income for a month, cut that number in half, we can use half of your income towards all of the debts that you have, including the future mortgage. Well, FHA lets us go not just with half of your income, but with 55% of your income. So it's a little bit more than half. Doesn't sound like a big deal, but that is the make or break for a lot of people. That extra little bit of income that we can use really helps out a lot of people qualify for this loan program. And so if you understand how mortgages work, you would know that low FICO scores, low down payments, and stretching people's income more, this is all additional risk that lenders are taking to originate these types of loans. And so the way that they're able to do it, right, is by the fact that every single person who has an FHA loan in the whole country is paying mortgage insurance for the lifetime of their loan. not property insurance, right? Yes, the property will have to be insured too, but FHA is special. The way they're able to offer these special terms for people's mortgages is because everyone is paying mortgage insurance, which means that if one person with an FHA loan defaults on their loan and gets foreclosed on, well, there's an insurance that everyone is paying into that helps make that lender whole. Not exactly like that, but that's kind of the big picture idea, right? Is that like everyone is paying this insurance so that if one person gets into trouble, all of these payments go and contribute to making the lender good again. So lenders are able to take this risk. So that is like the key. But that's important to know. If you're the borrower, it doesn't matter how much money you put down, you're still going to be paying mortgage insurance for the life of that loan, right? Unless you refinance out or you sell that property, every payment is going to have a piece of the payment is going to be some mortgage insurance. Another thing to keep in mind is that at the time of this recording, at the end of 2023, interest rates for FHA loan programs is almost a full percentage point lower than what we're seeing for conventional rates. So like the rates are lower, lower down payment, you can go with a lower FICO score. And so a lot of people are tempted to think that FHA is just for people with bad credit. That could not be further from the truth, right? It's for anybody. Like we have people with 800 credit coming and looking for an FHA loan because maybe they don't want to put a lot of money down, or maybe they want to buy a multi-family property and not have to put 25% down. There could be many reasons, and that this loan program is not only for people with credit that's a little bit beat up, right? It's for anybody essentially that can use it as their primary home. One super important factor with the FHA loan program too is the appraisal step. So FHA appraisals tend to be a little bit more strict than like conventional appraisals. And when I say that, what I mean is that if there's chipped paint in the property at the time of the appraisal, if there is like a loose handrail, if there's missing security features, like they're going to really be, that appraiser is going to be looking for, health, safety, structural issues with a fine-tooth comb. And so things that you might not have even called out, things that might seem superficial to you, that could get called out in the appraisal. And this is important in Puerto Rico because obviously a lot of folks want to be able to purchase a place and they'll call me and tell me, Nate, I want to buy a fixer-upper, which totally makes sense. Like I get that. I love doing work on properties. And so I get that. However, this loan program, and even conventional loans to a certain extent, but it's not going to be for your fixer-upper. There are like 203K FHA loan programs, it's called, that is for, lets you roll in the cost of some of the improvements into the loan amount. Unfortunately, at the time of this recording, that's not an available loan program in Puerto Rico to my knowledge, right? And so it has to be for a straight purchase where the property is essentially move-in ready. And because in Puerto Rico, the vast majority of listings are not subject to appraisal and as is, if you sign a option to purchase agreement that says that it's as is, that means that you, the borrower, that if during the appraisal anything is called out that needs to be fixed, that means you're going to have to pay for it to be fixed before we can close. So essentially, you're paying to fix someone else's home so that we can get closed, but then it would become your home. So that's something to really keep in mind. Thankfully, one really great benefit about the FHA program, especially in Puerto Rico, is what's called the FHA amendatory clause, because the vast majority of contracts that I see have no appraisal contingency, meaning that they say this is not subject to appraisal. If it appraises below the value that we've agreed on that you're going to buy it, then you have to contribute an additional amount of money to get it up to that contract price. So like that is a risky position for a lot of borrowers, because if you want to buy a home and the appraiser says that it's worth less than you offered on it, you want to be able to either renegotiate that price or maybe walk away and keep your deposit. The FHA loan program actually gives us a tool to help borrowers with that, which is called the amendatory clause. What it basically means in a nutshell is that if it appraises below value, even if the contract says it's not subject to appraisal, this is a federal guideline and it supposedly trumps what it says in a local regional contract. And so you should still be able to walk away and keep your deposit, even if you signed a contract that's not subject to appraisal. Now, that would be deeply unpopular with the listing side. the sellers are not going to want to be in a long process and waiting and to find out if we're going to close and all that stuff, and then have you walk away and get your deposit back when they specifically said it's not subject to appraisal. But that is a benefit of the FHA program, is the FHA amendatory clause. So have that little nugget of knowledge when you're kind of negotiating your contract. Know that if you're qualified for FHA, you've got kind of an extra arrow in your quiver, if you will. Other good news about the FHA loan program is that the new maximum loan amounts were just released. It used to be around like $470,000 was like the maximum amount of a loan that you could get in Puerto Rico and in most other parts of the US with FHA. But as we're coming up on the new year here, 2024 is coming up, they're raising these loan limits. So now we can actually qualify folks for a bigger loan with FHA. I'm going to refer to these notes here because I still don't have the new values memorized. So for a single family home, the new loan limit is going to be $498,257. It's a very precise number. I don't know how they reached that, but that's the new loan limit for single family home. But for multi-unit properties, there's some other higher loan limits. So if it's a 2-unit home, you could have a maximum loan with FHA of $637,950. If it's a 3-unit property, then you could qualify up to $771,125. And if it's a 4-unit property, you could potentially have a loan up to $958,350. So there you go. Those are the max loan limits coming up in 2024 for the FHA loan program. One kind of really important thing it's like a very tiny, maybe sounds like a tiny detail in all of this, and I don't want to get too much into the weeds about it, but it's called the self-sufficiency rule. So if you're someone who's considering using the FHA loan program to buy a multi-unit property, like a multifamily, 2, 3, or 4 units, you need to know about the self-sufficiency rule, which means basically FHA, as they're taking on all this extra risk, letting people with lower FICOs, lower down payments, stretching their income more, as they're taking on this risk, the FHA wants to kind of protect itself if the borrower's not able to make their payments. So one of the ways that they do that and kind of mitigate this risk is with the self-sufficiency rule, which says that if you take the total mortgage payment, right, the PITI, principal, interest, taxes, and insurance for a property, if you take that amount, and if it's a multi-unit, basically what we need is that the appraiser to tell us what is the fair market rental value for all of those units, right? So if it's a 3-unit, how much rent is it going to generate? Long-term rent, not short-term rent, right? Not Airbnb or VRBO. Talking about like an annual lease of the person in there. We need the appraiser to give us an opinion of how much is that property able to rent for. And then what we do is we look at the two numbers and say, okay, how much is the mortgage payment? How much is it going to rent for? The amount that it's going to rent for, we take 75% of that value. That value needs to be higher than the mortgage payment, the total mortgage payment. And I know that's like really into a lot of technical details and stuff like that. But if this is what you're considering, you really need to know about it, because the only way we know if that's going to work out is at the appraisal step. And to get to the appraisal step, you've already made an offer, signed a contract, and given somebody a deposit. So when you're out there shopping, if you're looking for a multi-unit property, this is something that you need to have in your mind and be asking. Like, you can ask the listing agent if there is one. You can ask the seller, is it rented? How much does it rent for? Ask neighbors, how much is the properties around here renting for? And also, I'm going to put a link in the description. There's a tool that lets you look anywhere in the US, Puerto Rico included, and you can see what it for 1, 2, or 3 unit and 4-unit properties, how much is the fair market rental value on average in that area. So I'll put that link in the description so that you can have that tool to check out for if you're considering a multi-unit purchase with an FHA loan. And the last benefit that I'll mention about the FHA loan comes to if you're wanting to purchase a condominium. Condos, if you've looked into buying a condo, the thing to know there, I've made other videos about it, but it needs to be warrantable, meaning it needs to be, the condominium needs to meet the criteria of the loan program that you're using to purchase it. FHA, thankfully, has a list of pre-approved condominiums that it's already vetted, that are already approved, and it makes that the condo approval process super smooth and slick for us. So I'll put that link in the description too, because it's not a long list, mind you. There's not a whole lot of condominium communities on the island that qualify and that maintain their qualification, but there are some. And so that's a good list for you to see if you're considering buying a condominium with an FHA loan program. So that is everything, guys, that I think people need to know about the FHA loan program, specifically in Puerto Rico. It is a really great program, like I said. It lets people, it's not just for folks with poor credit. It's for anybody, can be, but it's only for folks that can buy their primary home with this loan program. And again, that comes down to income, not how many days you plan to spend on the island. Okay, I've gone on long enough. Thank you very much for watching this. If you have any questions about this loan program or others and getting qualified in Puerto Rico, feel free to reach out to me. My contact info is going to be in the description below. But thank you very much for watching. If you're still watching at the end of this video, that's amazing. Thank you so much. Maybe give me a like or subscribe to the channel. That would be awesome. But let me know if you have any questions, and I will see you next time.